Hello everyone. Last night, another US macro this week which came really very bad, but US market reacted differently. Then from Indian market side, there were some serious banking weakness today. So in this video, let's discuss those in detail along with our regular pre-market report for today 6th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. This week is the complete data driven week. First on Tuesday, poor manufacturing PMI data. Then on Wednesday night, poor number of job openings. Now again, last night, the number of non-farm jobs added in August month from the private payroll company came as very bad. Tonight, US government is going to release the official data, but prior to that, the payroll database management company called ADP released their own data. According to them, in August, the number of new non-farm jobs added in the US is just 99,000 jobs against expectation of 1,44,000. This is the 3.5-year lowest value. Hence, this increases the 50 basis points rate cut probability to near 45% chance and finally settled around 40% for the upcoming September 18th FOMC meeting, which offers some positivity. However, market was little nervous regarding the tonight jobs data, like how much average wage increased last month, how much the unemployment rate is, and more importantly, what's the official government number for the new non-farm jobs addition. Hence, Dow Jones down 0.54%, S&P 500 down 0.3%, and Nasdaq managed to close positive of 0.25%. Here last night, along with the S&P 500 index down, VIX also down by 6.6% and moved below 20 from around 21.5. So index down and VIX down, which happens only if the decrease in the open interest, meaning US market didn't fall much because of the short covering, which is temporary support. In this way, we can say global momentum haven't improved, in fact it's deteriorated. Then regarding Indian ADR, it was completely opposite to last 2 days. Only Wipro closed 0.5% positive and all other major ADRs closed negative. In fact, in Indian market, Infosys and HDFC Bank closed positive, whereas ICICI Bank closed flat. So for that base in US, both the banks ADR was down around 1.5% and Infosys down 0.7%. Overall, from ADR perspective, banks looks clearly negative, whereas IT is mixed. In line with that, early morning today, GIFT Nifty closed at 25,199, equating it with the spot market. For now, it's indicating the gap down opening of 60 to 80 points. Then in case of oil, it didn't change much. At the time of this video, WTI crude trading around $69.5 per barrel and Brent crude closed around $73 per barrel. So these are the things happened in the dollar market. Now let's look at the India related info. First, just for banking, there are 3 news and all the 3 got the potential to influence the banking stocks on the negative side. Maybe that's the reason why Indian banking ADRs in the US market were down significantly. Yesterday, as per NSDL sector breakdown data, in the August month, banking stocks is the only major sector where FII actually sold their holdings. Healthcare, FMCG, consumer durables and IT, all those received the new FII fund between 3,500 crore rupees to 6,000 crore rupees. On the other hand, financial is the only sector where fund had the outflow of 12,000 crore rupees, and this is the first possible negative influencing info. Second, if required, please pause and have a look. Quant Mutual Fund released their holding data yesterday. Here, as we see at the July month end, Quant Mutual Fund had HDFC Bank in each one of their major funds, and that in August end they completely sold it. At present they have 0 HDFC Bank stock holdings in their major fund. So this is the second banking influencing info. And then the third very important one. Yesterday, S&P Global released the market intelligence report for the Indian banks. Here, either in the description or in the pinned comment, I will attach the link. Please have a look. If anyone investing or trading in the banking stocks, it's a must-see one. There are in total 32 listed Indian banks, includes both private and public one. So for all those, S&P Global Rating Agency made the performance score and from that they made the performance ranking. Now as per them, Kotak Mahindra Bank is the best bank in India ICICI Bank comes as 6th rank, then HDFC Bank comes as 8th, whereas the SBI comes as 24th rank. So if just Kotak Mahindra Bank alone trades positive and other major banks trades negative means, then it's an influence of this market intelligence report. So these were the 3 possible banking influencing info released yesterday. Then moving to the other stocks, as most of us know now, Reliance board approved the bonus issue. Here I presume it was during the yesterday's trading time. However, because of its influence, Reliance Industries GDR actually down near 2.5%. So we can expect Reliance Industries also will be on focus today. And finally about institution, as per NSE data, FI was net sellers and the net sold for near 700 crore rupees. However, if you look at the NSDL data, actually FI was net buyers. The net bought for 1585 crore rupees. Then regarding DAI, it's not an issue. Even on NSE database, the net bought for near 3000 crore rupees. So as a summary, US market closed mixed. Particularly Nasdaq closed positive. However, as we discussed earlier, most probably it was just a short covering. So don't think global momentum was improved. In line with that, both banking stocks ADR, Reliance GDR and GIFT Nifty all indicating the gap down opening of 60 to 80 points. Then about the things to look out. First at 11:30 a.m. Germany's industrial production data, then at 2:30 p.m. Europe's GDP data is due. Then in the aftermarket hours, Indian Bank's bi-weekly deposit and credit growth rate is scheduled release. Then for US, average hourly wage increase, unemployment rate and government official non-farm payroll jobs data are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 50 points gap up, but as the day progressed, it erased all the gains and turned red. Finally closed below 25,150. Thus on the daily chart, Nifty formed a bearish candlestick pattern resembling a dark cloud cover like pattern with RSI negative crossover. Dark cloud cover is a bearish reversal candlestick pattern where a down candle opens higher but closes below the midpoint of the prior up candlestick. This pattern shows the shift in the momentum from the upside to the downside, and the market control was also moved from buyers to sellers, which is not good. In addition, Nifty failed to sustain higher levels and finished moderately lower for the second consecutive session, but still held above all the key moving averages. So overall, it's an indication of consolidation with a negative bias. Hence, Nifty is likely to remain in range bound with immediate support at 25,080, which coincides with the previous swing high as well as the 10-day exponential moving average, while resistance is in 25,300 to 25,350 area. In case of Bank Nifty, it outperformed Nifty and opened 140 points gap up. However, selling at higher level erased some of the intraday gains and finally closed below 51,500. Thus on the daily chart, Bank Nifty formed a small bearish candlestick pattern with upper and lower shadow. And in addition, it remained within Tuesday's trading range for the second consecutive session and sustained above all key moving averages with a positive bias in RSI and MACD momentum indicators. Hence, we can expect Bank Nifty to take the lead going ahead and expect levels of 15,900 to 52,000 from short-term perspective, and the crucial support zone is in the range of 15,100 to 51,000. Regarding the weekly options data, the maximum call option open was at 26,000 strike, followed by 25,200 and 25,500 with maximum new call option rating at 25,200 strike and then 25,500 and 26,300. On the put side, the maximum open was at 25,000 strike, followed by 24,000 and 24,500 with maximum new put option rating at 24,000 strike and then 24,200 and 22,350. Thus from options data, 26,000 is the immediate resistance with support at 25,000 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.